we lay out
Yeah.
what your
Yep.
income is going to look like over about a 5-year period, right? And
Hmm.
then we start kind of structuring things so that you get the most bang for your buck, right?
Yep.
So in this scenario, what you might want to do, let's say they bought the property in 2022, didn't need to do the cost segregation study. In
Yeah.
2024, they have a lot of income and they
Yes.
still have, cost segregated, they still have the ability to do a cost segregation study. So you would do the cost segregation study, and then you would be able to catch up all of the depreciation that you haven't taken for those
Aha.
3 years based on the bonus depreciation,
Three.
right?
Okay.
So
Yeah.
so let's say, because you have 22, 23, and 24 in this in this
24. Yeah.
in this in this
Hmm.
example, right? So you would be
Yep.
able, let's say you took just the regular depreciation for those first 2 years. Well, now you would
Correct.
get all of the depreciation, all of the bonus depreciation that you're entitled to, less what you took in those 2 years.
Already.
You get
Yeah.
all of the depreciation you would have normally gotten over those 3 years, less what you took in the first 2 years. And it's called I believe it's called a section 481 adjustment, and you have to
I
file a
see.
form 3115 with the IRS when you do that.
Yes.
But it's part of the cost segregation study. The cost
Yeah.
segregation study firms do typically do the 3115s. It's part of their regular business. They're experts at being able to figure out how much catch up depreciation you'll have. So it's the same process. When you go to get a cost segregation study on a property, you go to the cost seg company and you say, look, I just bought this
Yep.
property. Here's the closing statement. Here's how much capex we're going to do. Blah blah
Yep.
blah. And they'll
Hmm.
typically will give you an estimate of
Yep.
what they think the benefit that they'll be able to pull out of the property will be. So they'll give you,
Right.
here's what we think we're going to be able to reclass. We think we can do so much 5 year, so much 15 year, so much land allocation. And then they'll
Hmm.
give you, of course, they'll give you a fee quote also, right? So
Yep.
you're able, when you do a catch-up study, they do the exact same thing. They tell you how much catch-up depreciation you're going to have, right? And then you can make a decision as to how much that depreciation will help you.